Good morning, everyone. So you've decided to turn your basement suite into a basement rental income property, which is absolutely fantastic to gain that extra source of income. Don't forget, however, there are taxes to be paid on that extra source of income. What do you have to do? First, you got to keep track of all your rent that you collect, okay? And then you got to keep track of all your expenses. The most mainstream expenses for rental income are property mortgage interest, okay? So mortgage interest, not the mortgage principal. So the mortgage principal, when you pay that, that's not an expense. Yes, it's cash coming out of your pocket, but it's not an expense, okay? It's adding to the equity of your rental property. Or in this case, because you live in half of this house, the equity of your home. Okay, so other things: property tax, house insurance, utilities, repairs and maintenance. You know, those are the general ones. Now, in this case, the case that we had yesterday was somebody with a bungalow. They live in a bungalow. They are renting out their basement, and the question was, how do I keep track of all this stuff? Well, you go get all your receipts, all your bills, add them all together, and for things like property tax and insurance, utilities, those things, you keep track of all of it. At the end of the year, because this is a bungalow, the math is easy. It's about half. And if you're off by a few square feet, it doesn't matter. Don't stress about being perfect. Just get it close. That's all the government cares about too. They're not going to care about a difference of $5 in tax, and neither should you. And it's a waste of your time. So you take all those expenses, you add them all up, times by 50%, and that becomes what you get to deduct. Now, how much tax are you going to pay on that stuff? That depends. How much money are you making in your other job? If you're making $30,000 a year, chances are the tax on that rental income is going to be 25%. Okay. If you're making more than $48,000 a year, the tax on that rental income is going to be 30.5%. Okay. So if you're unsure, talk to your accountant. I'm sure they'll be able to give you an estimate of what your taxes are going to be and how to calculate that. Keep your records. It's important. Your accountant doesn't necessarily need to see your records for your rental. They just need a summary, so you provide them with a summary. But the CRA, if they're ever asked, will be required to provide a receipt. So hope that helps. Take care of yourself, take care of your family, take care of your friends, and be well.